All right, welcome to Bit Center. We just broke 58,000 today, and it's about to hit 60,000 anytime. Get pumped. And Microstrategy is about to buy $1 billion worth this week. Pretty crazy. Anyways, there's a ton of Bitcoin content coming out every day, like dozens of podcasts, articles, global Bitcoin news, etc. It's tough for most people to keep up with all of it. So we bring you the best highlights and need to know information. My name is Roland, and this is block number 3. Make sure to hit the subscribe button and the bell so you can be the first to see our new episodes. We provide you the links at the bottom in our comment section. Today, we will be discussing some recent key Bitcoin highlights like Bitcoin lending and borrowing, new Bitcoin ETFs in North America, other key recent Bitcoin news, and some great podcasts. Let's start the show.
In a recent Forbes article, in the first paragraph, they give a pretty good insight. Follow the advice of Jim Cramer and Elon Musk. Buy at least a few Bitcoin. They highlight that while many companies have made the headlines, many of these corporate initiatives to purchase Bitcoin have not yet been published. As institutional investors accounted for 86% of flows to Grayscale's ETF, the largest Bitcoin ETF in the world. They highlight money printing, the Bitcoin halving, and the overall theme of the article, although it shows caution, is that Bitcoin is increasingly important for asset diversification.
Preston Pysh hosted Zach Prince on his podcast the other day to talk about BlockFi and Bitcoin lending and interest from both the retail and institutional sides. Zach gave us a fantastic look into how it all works and how retail is able to earn such attractive yields. Zach explains how our tax code is favorable to debt financing and how you're generally able to deduct the cost of that interest under an investment interest expense deduction. Basically, this means that you should never sell your Bitcoin if you absolutely do not have to. You can use the yield that you make off of your Bitcoin each month to buy things, or you can even get a fiat loan with your Bitcoin as collateral. So yeah, you don't really ever need to sell it unless you really, really have to. BlockFi never lends Bitcoin to retail investors. They only lend to highly credible and credit-worthy institutions like market-making firms, hedge funds, trading firms, other large institutions who are in the crypto markets, and they can't finance their normal business activity with typical prime brokers. So that's where BlockFi steps in. Zach goes on to explain how these institutions use the Bitcoin that BlockFi lends them. They're essentially just providing liquidity and capturing spreads in various Bitcoin trading markets, which is pretty much risk-free because they're on both sides of those trades and they're just, providing liquidity. So it's fascinating to think about Bitcoin lending in that many loans are over-collateralized and BlockFi can recall the Bitcoin 24/7, 365. It's vastly different and more advantageous than other traditional assets such as like equities, bonds, real estate, etc. Those things take much longer to recuperate. I highly recommend this podcast, especially if you use BlockFi. Here's a couple clips.
So what do? It's really simple. They buy Bitcoin over here for 99.95 cents and they sell it over here for 1.002. And they just do that all day. It's a service that they're providing to the market at the end of the day. The service is they're providing liquidity into the market and they get paid by capturing those small spreads. The liquidity profile of the assets that are supported to be used as collateral at BlockFi is dramatically better than a house. I would argue that it's even dramatically better than securities because of exactly what you described, Preston. These things trade 24/7, 365 globally across both spot exchanges, derivative exchanges, and with real over-the-counter institution to institutional volume. And BlockFi is connected to all of those venues where liquidity is available.
Saifedean Ammous, author of The Bitcoin Standard, one of the best books on Bitcoin to date, spoke on his podcast with Michael Saylor, Bitcoin all-star and CEO of Microstrategy, who discusses the current state of Bitcoin in corporate America, Saif's new book, The Fiat Standard, and Microstrategy's recent Bitcoin for Corporations conference that generated viewers around the globe and has now been watched over 250,000 times.
When we started in August, we were the first public company to make a serious commitment, and then Square followed us, and then Marathon Patent did a pretty big Bitcoin acquisition for their balance sheet a few weeks ago, $150 million. And then when Tesla did it, we've now got 4 public companies in a row that have all made pretty material commitments. Oftentimes, the thing that holds back public companies from doing something is they're concerned about how it will be perceived by their outside shareholders. And because it's very difficult to meet with outside shareholders, they're changing every minute of the day between 9:30 and 4 p.m., right? Your shareholder base is changing. But if you're an investor and your reason for not investing in something is it's making money too fast in an unpredictable fashion, I'm not even going to say what I think of that. It's quite amusing to me. If I had to be criticized, I think I'd like to be criticized for making money too fast in an unpredictable fashion. We have injected this into the conversation, I think, around the world. And, some of the criticisms I've heard lately about energy consumption of Bitcoin got me thinking about, well, what's the comparable system? And again, the critics are people that, again, they don't really contrast the energy consumption of Bitcoin to the energy consumption of the alternative system that it is replacing. There are consequences to irrationality under the fiat standard when there's 100 central banks and they're all competing. The early fiat standard had gold as a store of value, the early fiat stage. And then the mid stage of the fiat standard, I think, had sovereign debt as a store of value. And then I think the late stage, the twilight years of the fiat standard, I think it has stock indexes. The rise of the Vanguard 500 and John Bogle and the S&P, the Dow, the S&P, the NASDAQ, these stock indexes, they emerged as a store of value, I don't know, maybe 2010. At what point did the Swiss central bank start holding stocks?
2011, I think.
So why would you sell something going up in price by 100 or 200% a year? You wouldn't. What happens, Saifedean, if all the miners come public and they stop selling? What happens if the miners stop selling and start buying? Marathon raised $200 million in equity and bought $150 million in Bitcoin.
PlanB on Twitter frequently shares his charts showing the Bitcoin price after the halvings, which there's been 3 halvings, 2012, 2016, and now 2020. We're about 280 days past the 2020 halving, which happened last May. And you can see it depicted by the blue line. The purple line shows the 2012 halving, where we had the most exponential price appreciation in the early days. The green line tracks the 2016 halving, and the yellow or gold line depicts the average price growth of the 2012 and 2016 post-halvings. So as you can see, we're fairly close to the 2012 post-halving tracker, which is pretty good news, right? I would not be surprised if we continue to track more in line with the 2012 post-halving price movement, or even perform better, right? Now that we have increasing institutional interest, more all-around knowledge and understanding of Bitcoin, thousands of more on-ramps globally to Bitcoin compared to prior cycles. And now we have Bitcoin ETFs, which I'll talk about shortly.
Bitcoin has been getting more exposure in mainstream media. However, the opinions are still usually neutral or negative. Most critics are beginning to sound redundant, spouting the same concerns over and over, while Bitcoin continues to win.
Okay, what happens if Elon Musk's CFO loses his password?
Okay, what happens if Elon Musk's CFO loses his password?
We got our first Bitcoin ETF in North America this week from Purpose Investments. Over $200 million was traded on that opening day of Purpose Investments, their Bitcoin ETF. And it is listed on the Toronto Stock Exchange. And it was already in the top 10 most actively traded securities on the very first day. In Purpose Investments, they store their Bitcoin offline in cold storage with Gemini. So that's a pretty fun fact, pretty cool. Another Bitcoin ETF actually launched the day after, and that is the Evolve Bitcoin ETF, and also on the Toronto Stock Exchange. And they had pretty great volume as well. So yeah, spectacular success immediately. And we've got to have one in the US pretty soon, I would imagine. New York Digital Group recently filed for a Bitcoin ETF with the SEC. And so I'm sure the SEC is feeling pressure, especially since they've seen recently 2 Bitcoin ETFs launched in Canada and have great success. The US just can't be missing out on that activity, that money. So there's a ton of money to be made, and I'm sure it's going to get approved hopefully this year. So yeah, see how it goes. Here is a well-written article by Alden, and she debunks 7 of the most common misconceptions of Bitcoin. I'm sure you've probably seen some of these misconceptions in the mainstream media. However, just know that these MSM journalists, they only write and research at the service level when it comes to Bitcoin. You're much better off reading and learning from Bitcoiners who spend day in and day out over many years studying Bitcoin and all of its intricacies. They've spent the real time and effort to dig deep and extract truth and reality. Lynn unravels tired and lazy misconceptions like Bitcoin's a bubble, it has no intrinsic value, it wastes energy, Bitcoin's too volatile, or governments will ban it. Basically, in short, Bitcoin's not a bubble. It's the pin that will pop the fiat bubble and is currently doing so. Bitcoin is backed by its numerous utilities and hard money properties. Only Bitcoin mining uses energy, and that energy usage is decreasing to 0 because most Bitcoin has already been mined. I think it's 89% of the total supply of 21 million has already been mined. So mining is decreasing to 0. Energy usage is declining. And on the contrary, the entire legacy financial system uses exceedingly more energy than Bitcoin mining. And Bitcoin mining also uses mostly clean energy, renewables, things of that sort. Bitcoin is volatile, but it's volatile to the upside over time. And some governments will try to ban it, but will realize those efforts are futile and detrimental. Go check out the full article. The link is below. Lastly, we have this poll for you where we asked people what the final Bitcoin max price will ever be, and 67% of the people said infinity, i.e. Bitcoin will go up in price forever. So that's two-thirds of the votes. So there you have it. Bitcoin has no max price. Infinity is your answer.
All right, everybody. Thanks for listening. Block number 3 is officially mined. There are links below for all the content we discussed in this episode. Let us know of any thoughts you have in the comment section. Please like our video and subscribe to our channel. And don't forget to follow us on Twitter. See you next time.
The stupidest thing you can do is sell your Bitcoin. Don't sell your Bitcoin.